Hello and welcome back to my YouTube channel. Today's topic is forget get rich quick. Focus on getting rich for sure. Because get rich quick is basically get rich quick is like I want to have a six-pack abs in 3 days while eating pizza. See, everyone wants shortcut, but the wealth does not come from speed. It comes from repeatable habit and then habit that you stick to for years. So today I'm going to tell you exactly how to get rich for sure. Picture अभी बाकी है मेरे दोस्त because wealth is not one lucky scene. Your life wealth story is not a one lucky scene. It's a whole movie, and the consistency is the hero. Today, I'm going to show you what get rich for sure actually means. The simple system to do without gambling. Because fast money is fragile, slow money is strong. So, why? First, let us understand why get rich quick is so tempting, and it's at the same time makes it very costly affair. Because get rich quick is tempting because it promises instant relief, instant status, instant freedom. And as a result of which, people start chasing hot stock tips, small cap mania, crypto hype, option trading, guaranteed scheme, all of these things people will start chasing because sometimes it works for few people, but most of the time it ends at get broke quick. It is never get rich quick. It's the fastest way to get broke. Some schemes can be called as get rich quick for the person who is selling those schemes and definitely not for the person who is buying. So next time when you think of buying a get rich quick scheme, ask yourself, is the scheme designed to make you rich or is the scheme designed to make person selling it rich? Now, let's understand the hidden truth about fast money. So fast money usually requires high risk, leverage, concentration, timing, and luck. And the problem is luck feels like skill in a bull's market. So people get confident that, oh, they can make big money in stock market while the bulls are running. But what happened is that they lose big when market mood changes, when the bulls are no longer driving the market. And this makes it very difficult for them. Remember, I told you, fast money is fragile. Now let us understand what get rich for sure actually means. Get rich for sure does not mean guaranteed returns. It means high probability system. You save consistently, you invest consistently, you avoid big mistakes. You stay in market long enough to increase your contribution over time. This is boring, but the boring point is where you get rich for sure. Guys, I would say if you want excitement, watch IPL. Do not use your portfolio for entertainment, for the highs and lows that you experience when your hard earned money moves up and down in the stock market. Now, here I'm going to share with you the 7 rules of get rich for sure. And this rules will has a high probability of wealth building. So rule number 1 is increase your saving rate. This is the real starter in your journey to build wealth. In first 10 years, the saving rate matters more than the fancy return. So if you invest a small amount of rupees 1,000 per month with high return, it's still small, but over a longer period of time, it will generate higher return for you. If you invest 10,000 per month with decent return, you can still build a base. Have one rule. Every salary hike, increase your investing first. Upgrade your SIP before upgrading your lifestyle with every increment. Rule number two is pay yourself first. Set a automation around it. Don't save what is left. Invest first and then spend the rest. Make sure that you have auto SIP on your salary day and start with 5 to 10% of your saving as an investment. And this is a really good start. I would say don't put your month end saving into your investment, because putting month end saving is like leftovers. Sometimes nothing is left and you might miss your payment or investing cycle. Rule number three, emergency fund plus insurance. So you see, one of the most important reason, and a lot of people come and tell me that we live in a market where money is so easily available, and even in stock market you can liquidate in a day. Then why this emergency fund plus insurance rule is so important? See, the rule is important because I want to build a protection layer where you are not forced to sell in emergency. See, most people investing fails because they withdraw at the worst time. It is important that you have an emergency fund, which is 3 to 6 months of expenses. Have an adequate health insurance in place. Have a term plan in place if you have dependent. This gives you saving power. Now let's look at rule number four. Rule number four is to diversify properly, not junk drawer investing. Diversification is not about buying 12 different funds. If you want to understand diversification in detail, I would urge you to look at my video on diversification where I've detailed out every aspect that you have to consider while diversifying. Diversification is having different buckets, which is equity for growth, debt for stability, cash for buffer, and gold optional. The goal is that we don't depend on one story. You need to diversify properly across different asset class. Now let's understand rule number five, which is to not chase trends with your core money. Trends are not evil, but your main wealth should not depend on trend. You can use this formula of core and explore, where 80 to 90% of your portfolio is in core, diversified, boring investing, and balance 10 to 20% is for the experiment that you want to do. Your future does not depend on what's trending next week. Your future depends on what investing decision you've made today and what is going to be an implication of those decisions in future. The whole portfolio that includes investment into diversified boring stocks will definitely give you compounded return over a long period of time. Rule number six talks about low fee plus low churn is equal to better compound. Fees and frequent switching kills compounding. So avoid unnecessary switching. Avoid high cost product. Review your portfolio monthly. You don't need to look at it on a daily basis because that is a more distraction. Compounding needs time and not interference. Rule number seven is to avoid leverage. Borrowed money removes patience. Normal dip becomes disaster. Leverage means borrowed money, margin trading, loan to invest, credit card investing. All of this removes patience out of investing. Once the patience moves out, the compounding formula does not work. And even the small dip becomes like a wipeout. So if you want to borrow to invest, I would say you will panic faster. And this is going to kill your emotional bandwidth. And leverage is like driving fast in rain because you watch Fast and Furious. And this is a very bad idea when you're playing with your own hard earned money. So avoid leverage at any cost. Now I'm going to present with you a simple three-step plan to get rich for sure. So first, build a base. The base of emergency fund plus insurance and ensure that you kill all the toxic debt out of it. Second, build a base engine with diversified SIP and correct allocation. Third, for speed, increase your SIP every year with income. And repeat this for years and years and years. That's the secret to build a wealthy base. Get rich quick is like a lottery mindset, but get rich for sure is a system mindset. Because picture अभी बाकी है मेरे दोस्त. Because by now it's time for you to write your own money story and make it a steady successful. Let me know in a comment section below what's your biggest temptation. Is it hot stock tips, option trading, crypto hype, guaranteed scheme, lifestyle EMI? I will definitely make a follow-up on what an exact boring portfolio structure for beginners look like. But till that time, let me know in comment section below what were your key learnings from this video. And if you know somebody who would benefit out of it, do share this video with them. Looking forward to your interacting with each one of you through this channel. Thank you for watching this.